Hi, this is Katie Ethington. I'm in the Business 483 class, and this is concerning the Genapsys case. With this one, just kind of going over the very basics, this company has made a cheaper DNA sequencer, and these two founders have kind of come to this point where they need to decide how do they go forward with their new machine. They have three options that they mention. One is just a very straightforward traditional. They're just going to compete with the people that already have machines. They're going to be offering them slightly cheaper. And they're going to be kind of marketing towards the same customers that already have machines. The pro there is that there is a high profit margin. The con is that there's fewer customers. And obviously there's competitor risk. The next option is what they call the razor and razor blade. This one is where they will sell the machine cheaper, and they are going to aim it at people who do not have a sequencer, because there is a very large market that could potentially be untapped there. Could potentially be tapped there. And then with this one, the pros are that they're going to have a large volume. However, they aren't going to be charging as much, so the profit margin really isn't going to be a lot until they get a lot of people running the machines with a lot of runs in it. The last one would be data analytics, where they're going to sell the machine even cheaper and then offer a cloud service where they would store all of the genome sequencing that's happened. With this one, my hypothesis is that they should go with the razor and razor blades option, because there's a few really key important things. One thing I've noticed right off the bat is that these founders really are trying to have their machine improve medicine and therefore help humanity. And that's very important. The next thing that I notice is that they still do have investors, though. Between those two, I believe that the razor and razor blade option is going to allow them to get this machine out to the most number of people, make it more accessible, especially to things like hospitals and diagnostic companies. And then it will also, well, it won't give a high return back immediately. Once they get enough machines out there and their volumes start picking up, it's going to definitely start making them more money than the traditional, just because those volumes, especially since they're planning on charging for the individual cartridges, the more machines they can get out there, the more cartridges being used, the more this model is going to be productive. Of course, there is a con with this one. It would mean that once they start with the razor and razor blades option, they can never go back to the traditional. They can't try to sell their machine for more, so they can't try to increase their profit margins that way. Another issue with this one is that it does take a little bit of time for them to earn their money back. However, I do believe that in comparison to the other two, that investors will definitely be all right with that risk there. Now with this one, I would say the next one that really piques my interest the most, that I think could be something they need to look at, is the data analytics. And I believe if they could potentially start doing a hybrid, get some of their machines out there, try to get some capital coming in so they can run more R&D and build up more venture capital to get this cloud-based service going, I believe that could really turn into a very valuable thing, both for medicine and of course also monetarily for the company. Now, with this one, the traditional one is also a really good one, though I do believe that the competitors can easily get them into a price war, and they can get them out of the market so fast, just like what had happened to another company. There's a lot of risk going into that one with with such a small customer base. I don't believe it's a good one to go with. I do believe it could work, but there's definitely risk involved. So my vote on this one is the razors and razor analytics. Sorry, the razor and razor blades, and then data analytics.